Back in November, we noticed something interesting. Banks stopped outright calling it a scam. In December, they still avoided saying that it was a scam, and by the first week of January, banks went completely silent. It was like a "leave me alone" vibe from them. It was a curious pattern, especially since all of them seemed to be acting this way at the same time. Then, we learned that the state-owned Iraqi Midland Oil Company announced they had discovered massive new oil reserves in the East Baghdad oil field. This discovery is set to add over 2 billion barrels to Iraq's oil reserves. To put it simply, Iraq is sitting on a gold mine of oil. Previous surveys from the U.S. government indicate there's even more oil yet to be discovered in Iraq. Now, think about the current situation for the new U.S. Secretary of the Treasury. The U.S. is dealing with a financial freeze and scrambling to manage its budget, which was depleted at an alarming rate by the previous administration, spending 30% of the entire budget in just 19 days. But despite all this, just 9 days into the new administration, the U.S. Treasury team, under Secretary Ms. Besant, is headed to the Middle East, specifically to Iraq, a country with a currency that's nearly worthless by global standards. Why is this happening? What makes Iraq so important right now? I'll leave that for you to think about, but it's clear that the U.S. Treasury's focus on Iraq is significant. It's an indication of how close we might be to a major change. There's talk about Iraq being on the verge of an economic renaissance. Al-Sudan's advisor has laid out plans for the next phase of Iraq's economic growth, and Article 140 is looking to be completed soon. This could be the breakthrough Iraq has been waiting for, empowering its people and revitalizing its economy. Oil production will increase, electricity will flow, and the country's financial system is likely to be restructured, creating a ripple effect that will affect everyone. But with this potential change comes a crucial question: is the value of the Iraqi dinar really in danger, or is it just noise? Today, we'll break down the ongoing claims of a potential devaluation and examine the Iraqi government's response. Stick around, because what you're about to hear may change the way you view the Iraqi dinar situation. Recently, rumors have been circulating about the future of the Iraqi dinar. Economists are warning that a devaluation might be coming, but the Iraqi government insists they have no plans to reduce the dinar's value against the dollar. So let's dive into why they're so confident. First, let's understand the critical role the Iraqi dinar plays in the country's economy. It affects everything: day-to-day purchases, international trade, investments, and so much more. When rumors about its value being at risk spread, they can shake the market. So where are these rumors coming from? Well, economists, especially those who analyze global trends and financial stability, are raising red flags. They look at past events, shifts in global markets, and other indicators that might signal a devaluation. However, it's important to note that these economists are not directly involved with the Iraqi government's decisions. They don't have the inside track on what's actually happening within the government's economic strategy. On the other hand, officials from the Iraqi government have made it clear that they're not planning to devalue the dinar. In fact, they argue that making any changes right now or in the 2025 budget could have damaging consequences. This brings us to the critical question: why are they so confident? First, stability is key. The Iraqi government believes that maintaining a stable currency is vital for economic recovery. If the dinar's value were to drop suddenly, it could trigger inflation, causing prices to rise and destabilizing the economy. Stability gives consumers confidence and allows businesses to plan and invest with a clearer future in mind. Second, trust. By keeping the dinar's value steady, the government aims to build trust with its citizens and international investors. This trust is a critical part of Iraq's efforts to build a stronger economy. Third, international markets. A sudden change in the exchange rate could cause foreign investors to hesitate or pull back, potentially impacting foreign aid and trade relations. The government is mindful of the delicate balance it must strike to keep foreign interest intact. So, instead of focusing on devaluation, the Iraqi government is working on broader strategies to strengthen its economy. This involves boosting exports, increasing revenues, and ensuring that the economic growth will support the value of the dinar. However, they are also well aware that the global economic landscape is unpredictable. Shifts in commodity prices, political tensions, and other factors can alter market dynamics quickly. That's why the government is committed to being transparent and maintaining stability wherever possible. What can we take away from this? When it comes to financial information, it's essential to critically assess the source. Not every opinion is equally valuable. It's important to consider where that information is coming from, especially when it affects something as important as currency values. There's also the matter of public sentiment. If citizens believe that the dinar is in trouble, they may start converting their dinars into more stable currencies like the dollar, which could create even more instability. The government has to manage this carefully. As we wrap up, it's clear that while economists may raise concerns, the Iraqi government remains committed to its course of action. It's a delicate situation, but we'll have to see how it all plays out, particularly with the 2025 budget on the horizon. Now, let's talk about Amendment 122C. This amendment could unlock funds that have been frozen, and it has the potential to completely change how Iraq allocates its budget. Right now, Parliament is dragging its feet, causing anxiety among financial institutions. Why is this amendment so important? Because it could expose financial dealings that many would rather keep hidden. When the amendment is passed, it could bring greater transparency to Iraq's financial system, shaking up the banking world. Consider this: when more transparency enters the picture, there's less room for shady financial practices. And that's why banks in the Middle East are feeling the heat. They've been warned that changes are coming, and they're likely worried about what these changes might mean for their operations. Once the amendment is passed, the ripple effect could be felt globally. This isn't just an issue for Iraq, it could reshape financial systems worldwide. Remember when a major change in financial policy last rocked international markets? It caused shockwaves that affected everything from individuals to corporations. The passing of Amendment 122C could have a similar impact. As we talk about the U.S. Treasury's role in all of this, it's clear that they're on high alert. They understand how crucial these decisions are. If Amendment 122C passes, it could trigger a chain reaction that could radically change the financial landscape. Banks are going to have to adjust their operations and recalibrate their financial strategies to keep up. We've seen real-world examples where monetary reforms have led to both excitement and fear. Countries that embrace change often come out stronger, but there will always be resistance from those who are comfortable with the old systems. The transition period could be tough, but it might also present new opportunities for global business growth. If Parliament finally takes action, we may see new ways that businesses operate, especially those that rely on international transactions. The global economy could shift, creating new opportunities for growth, but it also poses risks for institutions that can't adapt. So, how can you stay ahead of the curve? Keep informed, stay updated on the progress of the amendment, and understand its potential impacts on the economy. Engage in discussions about how these laws affect not just banks but consumers too. And finally, we want to hear your thoughts. What do you think about the Iraqi dinar situation? Do you trust the government's commitment to maintaining its value?